Good afternoon, everyone. I hope your day has been green so far. The markets have been a little bit sleepy this morning, but they're quickly waking up, and it's normal to have this kind of digestion day into the market because have had 2 days of a really big rally, right? Off of the lows. All right. So before we jump into what I have in store for you guys today, and by the way, please feel free to post in your ticker symbols if you want me to review them. And if you want to have my take on them, also futures, commodities, bonds, anything can be posted in here. I can analyze anything. I am a day trader. I'm a swing trader. I'm an investor. I have been doing this professionally for over 20 years. And prior to becoming a professional independent trader, I come with 10 plus years in investment banking. So I have been working in the financial field my whole entire career. Markets are my thing, and this is what I do for a living. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest in the futures market, create generational wealth as well. If you guys, want to take a quick look at what we do, you can visit our website at TradeOutLoud.com. I trade stocks, I trade futures. And in fact, I day trade futures only in the first 2 hours in the morning, and then I'm done. I trade with the high velocity moves. I also swing trade actively the markets. I actively invest, and I invest as well. So generational wealth is part of my wealth ecosystem strategy. I am also the designer of a proprietary institutional trading system. The reason why I'm saying I'm the designer is because I cannot take credit for support, resistance, for everything that has been around, for moving averages, for different kind of indicators that come free with any kind of platform. The reason why I'm saying that I'm the designer is because I have added throughout time, and I have learned from the multiple workplaces and the strategies that various funds were applying on their accounts. I have created my own system. And I came from long-term trading into short-term trading because I gave up my job just to stay at home and create income in the markets by day trading, because day trading is the only style of trading that can generate you an income. Well, where swing trading and active investing and investing is generating let's say, kind of passive income. Because you do not have access to your cash every single week or every single month because you're invested in trades, and especially for investing trades, right? So you cannot take money out because that is for long term. So I needed to dive into day trading. I took all the education courses that were available at that time, 20 plus years ago. And it was not as easy as it is right now because you had to travel to different destinations in order to get your webinar, your seminars, or to get your education. But it was fun, right? I traveled multiple times to New York. I went multiple times to New Jersey. I met a lot of people. I met a lot of educators at that time. I went to Florida for my trading education. I went to Vegas. So I traveled definitely a lot. I went to Texas, to get my trading education. And yes, I took tons of courses before I even opened my retail day trading account. Yes, I was swing trading at the time, was doing it very successfully. I still do it very successfully to this very day for over 25, 30 years, I would say. But I needed something to generate income because I had the burning desire not to spend my time commuting anymore. And that was the biggest thing for me, because other than that, I loved my job. I was working in the financial industry. I loved it. It's pretty much, you're surrounded by the energy of money, right? So bottom line, let's get to where we are right now. But that was a quick intro about myself and what I do. I want to talk a little bit about the last quarter of the year. Okay, I would want to see, and I'm going to answer all your questions, guys. So just at the end of the presentation. So if you don't mind, just type them in there, and I will review it as soon as I'm kind of like done with this. All right, so first of all, we have just entered, this is the first week of the brand new quarter. It is a very important month for the market because this October represents the most volatile month of the year historically. Typically individuals, funds, or institutions that have been sitting on cash, for example, and then I'm going to review the sitting on cash thing, will want to invest into the fourth quarter because they don't want to let their money sit on the sidelines, right? You have to have your money working for you. That's the whole thing, right? It's the whole logic behind the market. So basically you saw that as soon as we closed the quarter, ended the third quarter, and on Monday, we started to rally, right? It didn't happen by chance. And in fact, we did talk about it in my trading room and in my swing trader videos that I share with my clients. We did talk about this phenomenon. We should have had a window dressing effect, but the window dressing effect came with the glass half full. Typically, how many of you guys know what window dressing is? Do you guys know what window dressing is? Window dressing phenomenon? All right. Okay. If you guys don't know what window dressing is, this is an effect that happens at every single end of the quarter into the market. So whether it's the first quarter, second quarter, third quarter, or the fourth quarter is totally different than the first three. And we apply different trading strategies than we apply into the first quarter, second quarter, and the third quarter. So funds, institutions, what they do is they try to look smart. And by trying to look smart in front of their clients, they are selling their losing positions. So when they're showing the portfolios to their clients are only going to see probably Eli Lilly, which is up, right? If they had it in the portfolio, but they're not going to show them Netflix. They're not going to show them Tesla. They're not going to show them, I don't know, Intel or Cisco or any other stock that is down on the year. So they're ditching. Why am I saying that the glass was half full this year? Well, the glass was half full because all we saw was just a sell and a constant organized sell. Sell, 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 sell into Friday. On Friday, we have brand new lows, and some of the indices and some of the stocks just made fresh new lows below the famously Kramer bottom in the market in June. That's what he said. He said that June represents the bottom in the market. I don't know about that. Does he know something that we don't? I don't know. Okay. But anyways, some of the indices and some of the stocks and some of the ETFs took that low out. Okay. And that was definitely a big dive down into the market on Friday. And that was the last of the selling, or was it? Okay. We're going to review some charts. And this is actually so beautiful right now, what is happening into the market, and so clear. Okay, so clear of what's going to happen because we have a little bit more definition yesterday and the day before. So Monday and Tuesday, we had a little bit more definition into the market that pushed the market into a really nice inflection point. Okay, which could be bullish above or bearish below. Super simple. Okay. So a little bit about the fourth quarter, because now that we're here, we need to talk a little bit about the fourth quarter, right? So I don't know if any other members, because I wasn't able to chime in and listen in. So I don't know if anybody reviewed the fourth quarter of what you can expect into the fourth quarter, but I'm going to do it anyways. Okay. So first of all, October is a very volatile month, very volatile. Volume typically comes back into the market in October. In October, the volatility increases as well. And that is because we are beginning earnings season, a brand new batch and the last batch of earnings season. So Q3 reports into Q4. So we're having these reports. Earnings season officially starts on October 14th. Okay. So we're not far. We're not far from October 14th. In fact, it's next Friday, right? Not this Friday, next Friday. And that is when volatility is going to come in. We have had a market that ran on news. For example, OPEC. We're going to review oil. Some of you guys may be interested in oil. Some of you guys may be interested to review natural gas. I'm an active trader, day trader, swing trader, and investor. I wear 3 hats into the market. So I could talk about all these different styles of trading because I apply them to my portfolio and I trade them almost every single day. Day trading, I do it every single day. Swing trading, I typically take between, let's say, 3 and 5 to 20 trades in a week, depending on the market environment. I also actively invest, and I'm going to give you some of the investing ideas that I gave my traders this week on Monday. All right. So what else is happening into the fourth quarter? Well, we have cornucopia trading. Cornucopia trading is actually kickstarts into the 3rd week, and it's coinciding with Thanksgivings. That is when the price action tends to move a little bit higher historically. And then we have Black Friday, which is going to have high impact into the market, kicks off the holiday shopping season. And that typically lifts, right, the activity of Amazon retail traders and also brick and mortar retailers, right? So you're looking at Amazon, you're looking at eBay, you're looking at Home Depot, at Lowe's, at Best Buy, you name it. Okay, so brick and mortar retailers, and also we're having the online retailers. So what else is happening? What else is happening? Okay. And by the way, you know, historically speaking, there's stocks like Amazon, eBay, Apple, even a Groupon or Chewy or Walmart, Costco, Home Depot, Macy's, Nike, that have the tendency to move higher, along with, you know, other stores like that I mentioned, like Home Depot, Target, Walmart, TJ Maxx as well. So these are, historically speaking, you know, stocks that kind of get that boost from Black Friday and Cyber Monday. That's why it's so important to understand the context, so you prepare and you get your shopping list ready in case you're a swing trader or an investor to what you would like to have into your basket. So cornucopia trading is very, very, very important for me, at least, because I deploy specific strategies. And then we're getting ready for December. Earnings season is winding down in the month of December. We have a lot of events that are happening. We're going to have the contract rolls into the futures indices, which is happening in the first week. I think it's the first or second week. I think it's the second week of December. Then we have the quadruple witching option expiration. You guys know what that effect is producing into the market, huge gyrations. It's going to be very difficult for a trading environment. After everything is all said and done, and after that 3rd Friday where we have the quadruple witching option expiration, then we kind of like breathe easy and we get into the holiday spirit. Volume is winding down. But with the volume winding down, typically if we have some kind of a trend domination, meaning if we have a dominant uptrend or a dominant downtrend, that tends to reverse to the upside. Or if we have a dominant uptrend, that tends to literally start moving a little bit higher. Why? This is bonus season. I don't know how bonuses are going to work into the financial world and into the funds world, because a lot of funds are down. Take a look at ARK, Cathie Wood's ARK, right? So I don't know how that's going to be and if they're going to get any bonuses, but typically if they are going to receive bonuses this year, most of the bonuses of these investors, and of course a lot of individuals, they would like to put a portion of their bonuses into the market, right? Who doesn't want to put their money into the market to work for them, right? I call the charts my employees. I love what I'm doing for a living. And I don't know, but the charts love me back. Okay. So this is what you can expect as you're going into December, and then into the last week where everybody's on vacation. Everybody's thinking, this is not a great time to trade. Think again, because you can expect window dressing is one of the most powerful effects that we have right now. So like I said, we have a muted half glass full effect into the end of the 3rd quarter, but now, right? But now are these individuals going to hop in some stocks based upon how the last quarter is going to be performing? What if we're going to have a strong, let's say, because as traders, we have to speculate and say, hey, if we're going to have a strong quarter, what are the strongest stocks within this quarter? What are the strongest stocks within this year, right? And they're going to probably leg into those stocks, right? And they ditch the losers, right? So into the end of the year, if you're thinking of buying bottoms, it's not a good time. It's not a good time. So those bottom pickers are always going to have their head handed to them, right? Because it's not a good time to buy because of this phenomenon. There will be a time when they're going to buy back their losers, and that's called the January effect. And that kicks off right after the new year. So this is what you can expect if you're around a trader. If you have experience in the market, you just don't look at charts because you need to see a little bit of what happens on the fundamental side, on the event side. And not only that, but this year we have midterm election into November. So the markets are typically pressured into that specific date as we're going into November, into the first week of November. And typically you're going to see that the price may start basing or even sliding a little bit. Every year, every election is different, but typically this is what they do historically. So I'm just telling you historically, okay? I'm just a messenger. Don't kill me, okay? So this is what typically happens. And after that, because the market hates uncertainty, after that, the markets decide their directional bias based on technicals, obviously, because the markets really, don't have much of a say into preferences when it comes to election. All right. So with that being said, guys, let's take a quick look and let's start with an SPX, right? And I think it's a great opportunity to start watching and seeing. Oops, sorry about that. Let me just take this out. All right. And we're going to take a look at here it is. Take a look at the weekly, right? Take a look at the weekly. This week, we had a massive level into the 3,600. We violated that Kramer low, right? Just a little bit, just a tad. This is not really a violation per se. It's just a test. Even if you get a test just below this level right here, it doesn't mean that it's the end of the world. It's just a test and a retest. And because of volatility, those punches down or up can fluctuate quite a bit. So as you can see here, they fluctuated for about 30 to 40 points. They rotated. We have a really gorgeous 200 SMA. Funds still like the S&P for a bounce here, but we're definitely in a downtrend because we have the high, we have lower highs, we have a double top formation, we have a lower high right here, and we have massive support level of 3,600 that is deriving from a very interesting high that was set in 2020 in August. If you guys remember, this is the breakout from the pre-pandemic high that took it higher, right? And this is actually the resistance. And if you look to the right-hand side, look at this when I'm holding my cursor over this prior high and see how gorgeous of a minor support we have. Minor support is so much stronger than major support. Why? Because it has been previously tested to the downside and then broken up above. So this is very solid right here. This is a textbook. So if you look, for example, at another macro level, for example, on the quarterly, we are still trading into the congestion from the highs right here where we were trading. By the way, you guys remember, this is the 2010, right? This is the 2010. And then we came down, we came back up, right? All right. So these are quarterly charts. Every single one of these candles, whoops, sorry, I have the wrong symbol here for some reason, SPX. And I was going to say like, wow, SPX. When did this change? Okay. Oh, okay. I see it. All right. Sorry about that. All right. So here it is. Okay. If you look at this SPX, if it catches a bid and if it starts trading about 3,800 and 3,850, this is going to go higher throughout the year. Okay, this is going to go higher into the Q4 because it will break this level of resistance. Also, when we look at a monthly chart, we're seeing that same level of prior resistance that is setting massive support at this 3600. 3600 line in the sand. We got the rotation. Now, the next level of concern is going to be the 4,000. Okay, 4,000. Okay. All right. So we'll see if this is going to happen. Definitely, can anybody answer the question, especially you, Ronald? What trend are we in right now? We have highs, 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 highs. What is that? What is the trend that we're in right now? What is the trend that we are in right now? We have lows, higher low, higher low, higher low. This is somewhat of a black swan, higher low right here. It's still a rotational factor. And here we have another decision point. If you're looking at this macro look, Ronald, you will see that we are on a macro level in an uptrend. If you look at a quarterly chart, Ronald, can you see the charts? All right. So if you're looking at this chart overall, right, and take a look at the price action, we have it here from 76, right? 76. We have high, equal high, and I'm actually going to show you something really cool that is going to blow your mind away. And then we have another high right here. Look at the volatility that came in, right? Any downtrends? Anybody see a downtrend on the quarterly chart? So on a macro level, are we in an uptrend or a downtrend? I don't know. I don't know about you guys, but I'm only seeing an uptrend. All right. I don't have any downtrends. I don't have any confirmation of a downtrend on a quarterly chart. So investors are not freaking out right now. That's why when you're, watching CNBC or, they're very conservative. And that is because they're looking at a macro level. They're not like probably John or Jack or Jill, looking, at a very tighter time frame, for example, for day trading, which is 5 minute, or swing trading. They're looking at their daily charts because they cannot see the bigger horizon, right? They have blinders on. They cannot see, right, what's happening on different time frames because they don't know how to evaluate multiple time frame correlation, right? So when we're looking at quarterly charts, we're seeing that we have a massive, massive uptrend going on. And we have just come back. And even if we tap into the 3,500, which would have been my line in the sand and still could be the line in the sand ongoing for the fourth quarter, we'll see what happens because this is just, this is just the first week. This is just actually the third day of the quarter. Right? Remember, these candles, these quarterly candles represent 3 months of trading activity, right? So they're going to be closing on December 31st. But before then, let's take a quick look on the monthly chart. Monthly chart pullback. Take a look at this pullback. Now I'm going to just trace here. So I'm going to show you from the pandemic low. Oops, sorry, wrong tool. Here we go. Let's do a retracement from the pandemic low to the high. Where are we at right now? See the 3,500 that I was looking at for a retracement? It's a 50% retracement. It's a 50% retracement, right? So from the pandemic low to January 3rd of this year, we only had a 50% retracement, barely. What else do we have in our favor as support? We have the rising 50 SMA, 1. We have the 50% retracement, number 2. We have the prior pivot high from September 2020, which represents resistance, translates to minor support in ongoing price action into above 3,500, 3, right? Plus we have technical rotations that happened throughout the daily charts, okay? So when we're looking at a macro level, we're seeing quarterly charts robust. This is the SPX, right? I look at the SPX because it's a broader market. It has 500 stocks under it. So when I'm looking at it and when I'm seeing quarterly chart, very interestingly, we're still in an uptrend. Monthly chart came into a 50% retracement. This is solid. This is solid. Investors love to leg in at 50% retracement. Also love the 61.8. We haven't gotten to that point. Okay, so this level is of maximum interest. for investors to the investor side. Okay. So from this point on, if you want, we could go into the domain of, let's say, swing trading, right? So I'm telling you what active investors and investors are looking at right now. So they're not freaking out. What they're doing is they're legging in. It would be a shame not to start legging in. I did it. Okay. So I'm just telling you what I'm doing for my portfolio. This is personal. So I'm sharing you my thoughts, my personal thoughts on the market from 20 plus 30 years experience in trading the markets and being in the markets. So I think that with the stock splits that we had in most of the stocks out there, right? In, for example, in Amazon, in Tesla, you name it, right? All of these stock splits where you have some really appealing prices, where you had Amazon, kind of trading into that 100, I think it was 115 to 112. We could go revisit it. Microsoft, Apple, right? I'm seeing some really nice leg in opportunities that we can have for the investor side. Now, from the swing side, right? Remember, I wear 3 hats and look at the markets every single day. Weekly charts, take a look at what we have right now. So we have the 200 SMA. Right? So on the weekly, we have the 200 SMA. On the monthly, we have the 50 SMA. These are strong, robust, algorithmic rich areas where a lot of algos are triggering day trades. They're triggering swing trades as well. So that's the reason why Monday, Tuesday, we have the pop-up. We talked about it last week in the trading room. It's so funny because yes, we knew that the drop was going to happen into Friday. When we saw the sell-off on Friday, we saw drop. And we were like, okay, are we going to get a rotation? And the money is going to get back into the market on Monday. Exactly what it was. When I opened the trading room, the Dow, for example, was up already like 300 to 400 points. Okay. 30 points up was in the S&P overnight. Okay. All right. So we're still trading. So here's what we have. And what's very interesting is much more obvious when we look on the daily chart, but we have a high, lower high, double top formation. So this is a confirmed downtrend from this time period, only for the weekly. Okay. We're not quarterly, still up. Weekly is down, but it's trading on support. What would it need? What would the SPX need in order to rotate for higher? What would it need to change the trend? Do you guys know how to identify a change in the trend? Because everybody, I mean, not everybody, but some traders are even having a very hard time identifying a trend, right? Have a very hard time even identifying a trend. So I'm just trying to grab my drawing tool here. Okay, here it is. All right. So here we had the high from the low, pull back, low, pull back, low. You can see the symmetry that we pretty much had from this high to this low, because we had a big descent from this high to this low, pretty symmetric, and from this high to this low. Still, we had our A, B, C, D, right? If you look at it that way. Or if you look at the market, you can see that the biggest move happened to the downside. And the pullbacks were very shortly lived, like these pullbacks right here, very shortly lived, right? We have just initiated right now, we have just initiated the rotational pattern. So typically, if we are going to close this week into the green, and if next week we will take out this week's high, we may start continuing higher, at least into the lower 4,000 level. So we can go back into the 4,000. We are expected a measured move around the 4,000. From this point on, if 4,000 is going to hold, right, this is going to be the line in the sand. Why? And please watch this later. David is going to have the recordings available for you guys. So please watch this later. That's why I'm taking my time into the SPX, so you understand the market context, because without understanding the market context, you are going to trade blind any other stock that you may want to look at. So when you have reached, and my guide, for example, here is going to be the 20 SMA, because we have reactions into the 20 SMA, and the 20 SMA is here. Okay. If the price action is going to pull back, I am going to look for a mild pullback, because we are trading into the fourth quarter and we have to wait and see how earnings season is coming out. But if we're we have to be ready for a weak earnings season, and we have to be ready for a strong earnings season. All right, this is for a strong earnings season. A strong earnings season is going to have a very shallow retracement of 25 to 50% retracement. And then we are going to see another leg to 4,200. This is the bullish case. Okay, this is the bullish case. So 4,000, so we can expect a 4,000 going into the earnings season. Remember, next Friday. And then we can expect a pullback and rotation and back higher. This would be the change in the trend. This would be the area. I will show you in just 1 second. All right, so the area would be, let me just take, okay. This will be the area. You see this green dot, red dot right here? This would be the area where I would go full throttle long on a lot of stocks. Okay, because we would have the confirmation of a low and a higher low at the rotational time point. Okay, so this is for the bullish case going into the end of the year, because we're talking fourth quarter strategies. Now, the bearish side is that we may have a shallow retracement. You can see here that we have this 38 point, oops, sorry, got the wrong tool again. Hold on just a sec. All right, so we have the 38.2 retracement. So yes, we could get stuck into this level right here of 3,800. And from this point, we could actually start coming back, and then we could have a breakdown, right? We could have a revisit into the 50% retracement. And if we have really bad earnings, we're going back down 3,200 and so on. This would be the scenario for the end of the year. This is what I have projected for my portfolio when I take these two calculations into consideration when I do my trading. Okay, so this is actually a trend reversal and how it looks. All right. And if we get the price back into the 4,200, then we will see the price going back up. All right. Now, I am going to show you something that is going to blow your mind. You guys are going to love it. And it's so techie that, let me see if I can shrink it here. All right. Let me just give it more room. I hope you guys, and let me know if you guys are liking this. Just type a 1 if you think that this is interesting. If not, we're going to change the topic right away. All right, weekly. Okay, okay, cool. Okay, cool. All right, so, all right, let's see. Let's go to the monthly here. Okay, cool. All right, we don't have, and literally we don't have a lot of time, you know, talking to traders about this. Let's do the monthly here, because the weekly is too much. Let's do max available. Okay, cool. I love it. All right, so what happened, guys? 30s, 40s, 50s, 60s, 70s years, right? This is the 80s, 85, boom, 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 back down. All right, this is when the market started getting hot. From 95 to 2000, everybody knows the dot-com bubble. Let's see if I can zoom in. Yeah, okay, cool. All right, so I can zoom this. We don't need to see the candles here. I just want to show you, you know, the overall chart motion. So we have the 95. Basically, during the 95 to 2000, all you had to do was wake up in the morning, open up your brokerage account, put a trade on long, and just go to work. And then when you came home from work, you could just sell it, or if you want, you could just keep it in. You know, investing, swing trading worked fantastic. We had the dot-com bubble with the pullback, and the pullback came back where? If you look at this little high right here that we had a little high in 96, and we had a little high in 97. This is exactly where the retracement came into. And not only that, but we came very close to the 200 SMA. Did we or did we not come very close to the 200 SMA? That's why the 200 SMA is so important for price action, right? So important because it's a pop-up place. The 200 SMA is the daddy of all moving averages, is the king of all moving averages. Investors trade with the 200 SMA. It's an algorithmic rich area. Everybody loves that 200 SMA location and waits for price evidence into that 200 SMA. So what happened? The price started to go a little bit higher. Then we had the financial crisis. There's always something, guys. So don't think that, this year is something different than what we had in 2020 or and what we had in 2008 or what we had in year 2000, right? So these things happen. But if you take a step back, what do you see? Do you guys see a double top formation? Bingo, double top formation. What do you think is going to happen on a double top formation? A pullback. Now, it all depends on the market and the narrative and the economic releases and the earnings and other external factors to determine how steep or how shallow the pullback is, right? So you can't just trade in a bubble and say, hey, I'm not going to, connect with the outside world. I don't care what's happening in the outside world. Yeah, you have to see what the heck is happening, right? So when you look at this, we have a double top. And what do we have here? This is a double bottom. Remember that I was talking to you guys about the Kramer low? Some of you guys watch CNBC. You guys probably heard Kramer say, oh yeah, I think this is the low of the year. The fact that we had a punch into this level doesn't mean that it violated the level, right? It all means that it tested the level, just went a little bit lower because of the volatility. You can see sell, right? It was a panic sell. This was the financial crisis, right? Well, in all, take a step back. Don't you guys see that we have a double top and a double bottom? Oh, isn't this cool, right? Let me show you something else that is super cool. So if I do a retracement, right, from the high, oops, I gotta nail the high. Sorry about that. Let me redo it. So you have to be very precise in these things, but this will work for now. And for example, I'm going to go into a low here, right? Because we have the double top and the double bottom. And if we look at the technical chart and we go like, oh yeah, let's see. If the price is going to break above the double top high, we are going to go into extensions, right? First extension, second extension. Look what happened on the second extension, guys, right? Look what happened on the second extension. We actually gravitated. Why do you think? Because the third extension is always so much wider, right? So much wider. And we had this massive consolidation here, back and forth. Once election was over in November of 2016, right? This is November 2016. Do you guys see where I'm holding my cursor? Breakout. Where do you think the price is going to go? It's going to zip up to 261. And here we have the biggest volatility that happened. I don't know if you guys were trading in the market, but I was. It was in 2018. The last quarter was the only quarter that was not typical. And guess what? You see this red bar right here? October, right? It was a red October. Here it is, red October, stabilizing in November, sandwiched down in December. Do you guys know where the bottom was? December 26th. Do you know what happens on December 26th? Santa Claus rally. So if you know how to trade techniques that are appropriate for the fourth quarter, you would have made a lot of money, right? A lot of money, because you have the opportunity for the low to drive it back into this 261.8 high and back into this prior high. And then we had the pandemic, right? Then we had the pandemic. We had the swing high and the swing low in the pandemic that could be applied for another fib, right? And we had the extension back into the 423. Isn't this phenomenal? And this is where the trouble started, into the 423.6%, right? Isn't this phenomenal how it rode, the price action rode into the last level of extension? This is actually the last level of extension, right? If you want to go ahead, let me just get rid of these fibs right here. And let's get a little bit more into the pandemic side of things, right? So I'm going to go back to my fibs, because everything is really well correlated, right? Really well correlated. So I have a high, we have a low, right? So what do? Did we go back to the 261? No, we didn't. So that means that we still have room to the 261 sometime. I'm not saying that this year or next year, but time and time again, and price action proves that these levels never lie. And ultimately, these levels are going to be fulfilled. So what we had right now is basically a pullback, but we haven't revisited the pre-pandemic highs yet because those are below the 3,500. That's why 3,500 is that gray line in the sand, right? That is kind of like telling us bullish above or it's going to be a calamity below, and we're going to break below, okay? So this is what we're looking at right now. Now, in the sense, there's another fib that we can apply here that we actually that you actually saw because I share it on the chart. So I'm going to remove this. All right. So you can have a little bit more clarity of what's happening in the market. And I showed you exactly what I'm looking at. Oops, sorry. All right. And then we're going to go to the fib again from the pandemic low to the January 3rd high. Here we go. And this is the 50% retracement, which applies to the market where we are right now. So we are only into a 50% retracement from a prior significant low that we had. And yes, it was very choppy. We had multiple attempts at making new highs here, but I'm not seeing any devaluation in the market, and hard selling usually comes with the devaluation. And one other thing that I wanted to share with you is that I use an indicator is the Williams percent R, and I'm seeing a double bottom formation in the Williams percent R. I'm seeing a double bottom formation in my Williams percent R. The last time I saw a reading of this kind was back in 2009. All right. So I think for me, that is very significant because in 2009, I loaded the boat and I was loading some stocks in my portfolio that were in the pennies. One of them was Sirius Satellite. That's right. Sirius Satellite. I want to show it to you guys right here. Very cheap. It was a penny stock. All right. So let's go back here to, here it is. It was a 5-cent stock back in the day in 2009 when I bought the stock, and I did buy it at 0.05. I bought it at 0.015 and 20. That is where I liked in. Okay. Now it's trading at $6. But what I wanted to share with you is that you don't have to have a lot of money in your portfolio to start your investing account, because it's part of your financial ecosystem to have some money in there, and that, you know, there are a lot of opportunities. Now, back in 2009, we really didn't have another option for Sirius Satellite, right? We didn't have another option. We had Pandora that came years after. And then we have, you know, we had more and more, you know, things that popped up. Back then it did, Sirius Satellite didn't have any kind of competition. So XM Radio, right, didn't have any kind of competition. So for me, you know, it made sense because I have Sirius Satellite in my car, right? So I'm like, oh my gosh, I mean, are the automakers really going to let Sirius Satellite? I mean, I think they would have worked a deal or something. Okay. And now speaking, okay, so this was my take on the market in general. That's why I decided to go a little bit into this. And I want to share with you some trading opportunities that I think, you know, may make sense for me. And I actually legged in at $34 into General Motors. The reason why, and that is in my investing account. It's not into my day trading account. It's not into my swing trading account. So this is my long-term hold. This is where my money works for me. So I think it only makes sense because we are trading in the core of a range. $30 has been pretty much the plateau for this stock for a very long time. And I think it makes a lot of sense for me to leg into General Motors. Plus, you know, they're working on those electric vehicles and so on and so forth. And so is Ford. Okay, so Ford again into a confluence level, into the $10 right here, $10 for support. We have the 50 SMA, and we also have the 200 simple moving average, which makes a lot of sense. All right, so I'm gonna review some of the stocks. I just want to see, do you guys have any stocks that you would like me to look at? Just give me a heads up here and just post a ticker symbol. If not, I'm gonna go ahead and share, you know, some other trade ideas. Okay, I'm just gonna give you guys just a couple of seconds. And just so you know, guys, I am a trend follower when it comes to investing and when it comes to swing trading, because it's so much more easier to make the money to the trend side than to fight the trend. Okay. All right. Let's see. All right. Boyle. All right. So I'm going to give you my take, and also, but please, when you post the trade, tell me what you want me from what perspective, for swing trading or investing, because totally different zip codes right there. So on Emma, on Boyle, what are you looking at? Are you looking for a day trade? Are you looking for a swing trade or an investing trade? Emma, I'm waiting for Boyle. Emma, okay. Boyle for the swing side. All right, so for the swing side, I tend to look at weekly charts and daily charts. Okay. Look at the Ford, beautiful. All right. All right, first thing that I'm looking at, especially when I'm day trading, I'm looking at volume, right? It has considerable volume, good volume on the weekly, good volume on the daily volume, 2.5 million shares traded. And let's see here, swing trading idea. It hasn't had any kind of trigger, and the reality is that the daily chart is right into resistance. I would wait until the end of the week for Boyle, and if the week is going to close strong, I would take it next week over this week's high. All right. TSM. I like TSM as a stock. Okay, so TSM. Okay, for the investing side, we're going to go back into a longer type of time frame. I'm going to pull out my FID, significant low, significant high. It's kind of like in the danger zone right now. So if you're looking at TSM, TSM is not really reacting that well, but I do see it, you know, alive and kicking on the weekly chart. So for investing purposes, yes, it makes sense. I see $60 as support actually into it. So it's kind of rotating a little bit above that. Most of the stocks are going to be right now against the moving averages. And when you're seeing a fanning out of the moving averages, that creates selling pressure further to the downside. But if you're looking at 5 years, 10 years, just keep it. Okay, just keep it. All right, CMPS. All right. First of all, CMPS, if you're looking at a daily chart, I would not trade this because it's only trading with 133,000 shares traded. And Pat, I don't have your time frame. I don't know what you want, whether to day trade or swing trade. They're different or whatever it is. So please put the symbol on, and also what your strategy is for day trading or swing trading. For day trading, wow, okay. We have 3 more hours left. Let's take a quick look. For day trading, we had an inflection point here into the 11 to 1120. Pat, you know, just a friendly, you know, kind of like advice for you. Walk away from the stock. Walk away from the stock. When you're going to a chart and when you're seeing gaps in price, right? When you're seeing gaps in price, it means that you're going to have a big problem if you want to sell the stock or buy the stock. Okay, if you want to sell the stock or buy the stock, you may not have a buyer or you may not have a seller. I never ever in my entire career have ever traded anything that trades 133,000 shares in a day. I only trade stock that are past 1 million shares in a day. Okay, so Pat, if you want to, pretty sure you're very new to trading. I I would call this in my category garbage. Yes, garbage. It's a garbage stock because it has gaps into it for day trading. Doesn't make sense. Look for something that has volume. So please, I'm telling you, I'm coming with you guys. I'm coming to you guys with so much trading experience. I've day traded stocks for more than 17 to 18 years, trading futures for more than 10 to 12 years. Okay, so I do have a lot of experience, and I can share my experience with you. Stay away from this crap. Okay, simply put. All right, we have ASML for investing. All right, let's go to an investing time frame here. Oh, I like it. I think it's a great leg in opportunity. The leg in opportunity was into the 400 to 420. This is still a great leg in opportunity to have it on. Very good. Very good. I like it. ASML, really, I mean, not phenomenal volume, 646, but you're not day trading it, or even for swing trading, by the way, guys, even for swing trading, this is good. This is good. Not a great volume, but watch tomorrow, because if tomorrow we break today's high, so if this is going to be the set high for today, I don't know what the close is going to be looking like. It's going to look like, but if it trades over 470 tomorrow, this is a go. It's going to go 480. It's going to go to 490, and then it's going to go to 500. It has a lot of room for it. But if it trades below this 10 EMA into the 447 or 445, it's going back down. So that's for the swing side, and that is for the investing side. MA. All right, for investing, we're going to go to investing time frame. All right. Okay, so if you look at this stock, okay, look at the stock, guys. It has been back. I mean, look at the bars, right, that we had in 2013, 14, 15, 16, blah, 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 17, 18, pandemic, and then the crazy came out. Look at the size of these candles compared to the prior price action. This is insane. So this is how volatile the market is right now. Volatility can literally kill you, but can also reward you if you know how to trade and what to look for. All right, so from the monthly, we're getting a pop of the support into the 280. I like this area a lot for MasterCard. I mean, it's good. Even the daily suggests that it wants to go higher. The weekly, oh, sorry, this is the monthly. Let me go to the weekly here. Okay, the weekly is into a lot of noise, but all you have, Yana, all you have is time. So these are very robust stocks that you have, MA and Visa. So yes, they are a hold. This is my personal point of view. I'm sharing that as well. This is a great day trading stock. It is a great swing trading stock. It's a great investing stock. It has really great volume, good fundamentals. So it's definitely very good. All right. So yeah, it's on a plenty of support. I would love it if it trades above the weekly 200 SMA. That is when it's going to catch some power and start lifting up. Snow. I get a lot of questions for snow. I get a lot of questions for snow. Love it. We have a low set. All right, here is what a change in the trend looks like. We had down, and then we have a little bit up, right? We had a pullback, shallow pullback. Remember what I said with SPX, with the forecast for Q4? If we have a shallow pullback and a rotational factor, then we are going to have our higher low, which means that we're going to have a projection higher. It's textbook. And now we have this really nice base. It punched above this inside doji and up. It could go to 200 in no time. So 200 is going to be the new target on it. And by the way, the monthly chart looks amazing as well. Let me just go to the monthly. If we get a punch this month over 203.62, we need 203.62. This is going to go higher to 220, 240. It's ultimately going to go into this prior high and then higher. Okay. Let's see what else. Verizon, VZ. This is a boring stock. This is a really boring stock. I want to take you very quickly right now to a quarterly chart. Okay, so last quarter was really devastating for the stock. It came back to retest the 2015 low. It hasn't revisited the $38 in such a long time. Now, if you're looking at the macro level, you have high and you have a lower high here set in conjunction with this prior high. So it's a little bit choppy. It's fairly sideways when you look at it, right? So it's just a big chop. It just has support right here, and this is why it's popping. I don't know if you're in it right now, but if you're in it, you have to stay in, because over time it can potentially move a little bit higher and it will try to squeeze. Look for a squeeze. I mean, it's possible. This week it doesn't show right now. Like from the monthly perspective, is still very early. For the weekly, it had already triggered. I think for the short squeeze can go into the $40 and into the $42. And if it gets over 42, it's going to start building some kind of momentum and may start moving a little bit higher. WLK for investing. WLK for investing. All right, so we're gonna go here to the monthly. All right, so it needs to get above $100. Westlake Corporation needs to get over $100. In fact, 103. If it takes out 103, it had a really rough month rough month of September. But I think that, you know, it's fairly sideways in terms of technical pattern, high, low, right? So it's has its line in the sand at $80. It's trying to build up a little bit of momentum here. The daily started to rally a little bit, even last week when the market was lower. Westlake was moving a little bit higher. Okay. So yeah, from the daily perspective, inside day today, watch it tomorrow if you want to swing trade around it. Many times what I do is I have a stock that is that I'm invested in, and I don't give up. I swing trade around it. Okay. So you can generate more money. You can take that money out of your swing trading account, dump it, and buy more shares of WLK. So it's just a strategy of compounding that I use. Microsoft, day trade and invest. Okay. And this is going to be the last one because David is going to kick me out here. All right. Okay. So Microsoft for a swing trade. Watch Microsoft. Very interesting because it has been holding fairly well, very, very well. It has been holding tremendously. And yeah, if tomorrow we're going to start trading over 249 or wherever the high is going to take it by the end of the session, it will go higher. And I think it's going to start squeezing. All the stocks right now have a really great potential of squeezing. For the investing side, yes, Microsoft is still robust. I think there's a great opportunity in Apple and Microsoft and Amazon and Nvidia. Okay, these are the stocks that I like, and I already legged in on Monday into my portfolio because of the levels that I saw in the market. Know your risk tolerance, because this is very important before you even dive into investing. Know your risk tolerance and just dab into those stocks if you wish. All right, so for those of you guys that like what I'm doing, again, my company is Trade Out Loud. I provide different services for day trading, for swing trading. I provide coaching. We do offer funded accounts. We do provide education. So if you heard me and if you liked, I don't know if you liked, but I think that it's not a personal preference of liking or not liking. I think it's a thing of like, how profitable are you? Show me the money. We do have track records of all our trades since the inception of Trade Out Loud, or for example, since 2017, since I created the Trade Out Loud trading room, because I wanted to keep track and for, you know, individuals just like yourself to say, hey, is she putting the money where her mouth is, right? So for example, yes, we do have, for example, this is my portfolio for 100% transparency. For example, I day trade. This is my portfolio for this week. For this week, I'm $10,000 up for the week. These are my trades. I had a break-even trade. I had 4 winners and 2 losses.
Hey, Anka,
so these are all for today. Yeah.
Sorry, I gotta cut you off.
All right, perfect. Thanks so much, guys. I will see you in the trading room or in one of our education programs. Bye, everybody.